Hey everybody, Chris Pulver here, and welcome back to another segment of the Pulver Report, where we trade to be profitable, not perfect. Today's segment has been in the works for a long time, and it's been on my mind, weighing heavily for the last couple of months. I've been sharing this information in my live sessions for the Pulver Report and in my trading rooms each and every week. I just feel like things are weird. I feel like we've gotten to this point, where are the financial markets going right now? Where are we going to be in the next 1 to 3 months? If we need a correction, when and how will it happen? Should we just stay the course with blinders on, put on our Buzz Lightyear jetpack? To infinity and beyond! Or should we be really protective, go to cash, and believe that a bust or a crash is right around the corner? And although we're told that we can't time the markets, we are clearly witnessing some ridiculously overextended runs. We have crazy extremes, unsustainable levels, and euphoria-like conditions. And that reality at some point just has to take over. And then there's this famous saying from John Maynard Keynes that continues to ring true in the stock market. He said the stock market can stay irrational longer than you can remain solvent. What's really interesting about this quote is that Keynes is essentially saying investors can choose to ride the bubble, or they can bet against overvalued stocks. And if and when investors take the latter approach and bet against overvalued stocks, we've already seen how crushing that can be. We've seen these short squeezes and meme stocks, right? You see how dangerous it is to actually short the indices or short the stock market. So imagine this. Imagine being on the bandwagon thinking that GameStop, a struggling retailer that should be going out of business, is going to go to zero. And if $0 is your target, you are convinced that this company is going out of business and will fail. So you short it. You trade on margin and it goes against you. It goes a little bit further. You short it again. It goes against you again. Then you rationalize and build this narrative of why it's overvalued. And surely, once investors realize that the company is overvalued and it should be bankrupt, price will drop, get you to your target of zero, and you make a fortune. But instead of going to zero, GameStop goes from single digits to over $400 in just a few wild and crazy months. Yes, we had liquidity concerns. Brokers locked out and froze out traders. SEC and regulators started questioning the situation. Robinhood CEO, Melvin Capital, Citadel, what's going on? Social media trading influencers, all were involved. And there's even a documentary called Game Stopped? You haven't checked it out? Check it out. Crazy interesting, and this was global news. My point is this. This is just one example, but we're dealing with some crazy times right now. I mean, seriously, crazy stuff happening. And I've seen some crazy in my career. My first stock trades were during the dot-com bubble in 2000. And then when I really started getting into trading, learning about Forex especially, that was during the 2008 financial crisis. And here we are, post-financial crisis, 13 years later, with one of the most lopsided, bullish, and basically parabolic markets that we've ever witnessed. And to say that we are long in the tooth at this point is a bit of an understatement. And yet, little by little, the top we're all looking for, the top we're all waiting for, continues to show us that the market remains in favor of a melt-up, and we have found this amazing way of financially engineering our way out of these unsavory market cycles. So what are we supposed to do? We can keep riding this bubble. If we keep riding this bubble in euphoria, sure, we can continue to benefit, but if our investments become top-heavy, the market can quickly eradicate months and months of gains. But if we go the opposite way, if we become overly protective, we go to cash. That helps us sleep well at night. We have the peace of mind that our cash is safe. But then we're losing out on continued opportunities. We're losing out on this continued bullish trajectory. We're also experiencing decreasing purchasing power, increasing expenses, higher inflation on goods and services, and of course, nonsensical speculation and evaluations. So is it better to be bullish or bearish right now? Is it better to be both or neither? So I propose a compromise. This is what I'm doing, all right? I am cautiously bullish, and I'm balancing this idea that a healthy technical cycle is going to require some type of correction, anywhere between 7 to 15%. If this correction is absent, then we are just delaying the inevitable, and whatever correction or sell-off does happen will happen. It'll be faster, more chaotic, and probably more violent. Lumber is a great example of what an inevitable correction looks like. Cryptos as well are good representatives to show how crazy corrections can look. We have parabolic moves that look overstretched, stay overstretched, and in due time, reality and equilibrium bring them back to where they should be. sometimes even more. If it's just a correction around the corner, then let's see a little cleanse. Let's see a fair cleanse that allows investors to buy the dip, all right? That we can actually find prices at reasonable levels and we can get more excited for long-term investing. We can stay the course that this insane trajectory post-COVID has been on. Now, if we're not sure how to play it, you should be thinking one word right now: diversification. And what we're witnessing in the stock market is the stock market can't decide whether it's big tech, growth tech, spec tech, IPO, SPACs, infrastructure, value, financials, or other sectors that were actually going to lead the way. The NASDAQ and the S&P 500 continue to defy gravity. They've essentially become the same type of index. Meanwhile, the Dow Jones and the Russell 2000 struggle to make new highs and remain sideways. So if you're wondering, Chris, why are you talking about the stock market and only the stock market and not talking about cryptos or Forex? It's because it's all connected. We have technicals, we have fundamentals, and right now I could build a case just as easily for the bulls as I could the bears. And so we are torn between this risk appetite, this risk aversion, speculation versus safe haven. We're stuck between growth and value. And this tug of war is now very noticeable on our charts and certainly in the mainstream media. So I find myself asking this question, who am I to call the top? Who am I to disrupt this bull run? I'm just a retail trader. I'm a nobody, right? I'm a drop in the bucket, but I'm not naive. I profited more in 2019 because I went to cash into 2018. Okay, I profited more in 2020 because I was actively taking bearish positions on indices. I was aggressively bullish on inverse ETFs and volatility, and we witnessed one of the shortest bear markets in history that helped me capture some incredible short-term gains, only to then offer a decade-long discount. And this bazooka of money supply kept the markets flush with cash and the markets rallying ever since. So let's go back to John Maynard Keynes. Despite vocalizing his disdain for bubblicious stocks, if Keynes is still willing to ride the melt up, who am I to fight it? It's not worth fighting these markets, in my opinion. I trade to get paid, not to have my opinion celebrated. Now, one of my favorite movies as an investor, as a trader, is The Big Short. But imagine being Dr. Michael Burry and locking his fund up and sitting on positions for over a year, thinking that he's right, knowing that he's right, but what if he wasn't? What if the financial crisis never happened? Or what if it did happen, but it took until 2010, 2012 for the crash? Would Scion Asset Management have survived? It's difficult to say, but betting it all is a very gutsy play. That's a really difficult position. Stocks can go to zero, but on the upside, they also have unlimited potential. Historically speaking, investors have a much better probability of success with a bullish bias. Even if a particular stock's price is overvalued, the chances are that prices can stay overinflated and overvalued longer for someone else to buy it and someone else to lose out later. What really matters is who's left holding the bag. So are we in a bubble? Are we in a melt up? Are we still in limbo? What will really happen? If I had a crystal ball, or perhaps I could summon my inner Karnak the Magnificent, I could tell you what the future holds. Hermetically sealed envelope, up, down, or sideways. What the markets will continue to do. So in my trading rooms, here's what I'm doing. Here's what I'm talking to traders about. I am technically prepared for a correction, but until price is confirming a more convincing risk-off sign, or a bearish top, or structure breaking to the downside, I will continue to trade the path of least resistance, which is the upside right now. I am diversified. I'm dollar cost averaging. I'm lowering my cost on stocks I want to own. I'm balancing speculation and growth with value. I'm willing to hold. I'm willing to take additional ownership of strong and healthy stocks, financially flush stocks. I realize that the low tide sinks all ships. Now, my portfolio may not be recession proof, but I know that I am long on volatility right now and I'm taking a few bearish jabs at the market. I have some bear call spreads on the SPY, some bear call spreads on the Qs, but I'm still long in stocks and growth and value. I'm following pockets, pivots, supply and demand levels. I'm focused on a crypto portfolio that I can just sit, hold on, right? There's nothing wrong with this altcoin speculation, but for me personally, My crypto portfolio is, I'm giving it the time that it needs to grow and appreciate. And even with the patience I've shown in cryptos the last couple of years, I've turned, 2x, 5x, 10x returns. And again, this is not normal. And then there's Forex. Forex is what I'm always trading. I love the technicals, I love the efficiencies, and I'm leaning more and more on automation. I wait for my favorite patterns and setups. I know what I do well in my trading, so I build and I stack orders for those gains, and then I let robots do a lot of the heavy lifting for me. So if you're a trader, this is what you do. You plan for the best and prepare for the worst. And regardless of what happens, up, down, or sideways, I want to survive and make money. I'd love to stay profitable and expect to stay profitable given the current trajectory of the market if it continues, and I will ride this bubble as long as possible. We still haven't really seen this blow-off capitulation move. But when it all settles, if I'm profitable on Forex, stocks, options, cryptos, or even if I'm profitable in one asset class, hopefully it's profitable enough to offset the others, right? At the end of the day, trading to be profitable, I'm doing whatever it takes. But I think we need to embrace it. I think we need to go out there and get it, because whether the chaos comes or not, we need to be ready. So no excuses. Play like a champion, and I will be right alongside you. If you're looking for help, let me know. Between my Flex trading room, my Equities on Demand trading room, I know I'm able to help and educate thousands of traders out there. So, like me, I'm trying my best. I wish you all the best. You're not alone. It's just a game. And this game we can be very profitable with if we do it well. All right? So, I'll see you on my Monday and Friday live sessions. Thanks for tuning in today. I would appreciate a thumbs up and like of the video. And leave me some comments. Let's talk about the real stuff. Let's talk about stocks. Let's talk about Forex and cryptos and what you're doing. I want to know what you're trading out there, what you're focused on. But like I said, it might be wild and crazy, but let's get ready for it. And let's trade to be profitable, not perfect. All right, I'll see you in the next segment. Happy trading, lots of profits. Bye-bye.